Americans for Fair Taxation presents the weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, August 14th, 2026. This week's report is guest written by Travis Karnes. Travis is a strategic analyst who is the lead editor of the Peace Through Strength Institute. He's a constitutionalist who studies original constitutional theory. People can link to Travis by following him on his X account, which is at Publius, Publius _Val, VAL 1776, as well as his Facebook at Travis Karnes, TravisKarnes, or his email address, snackmix99 at AOL.com. Why America needs the FAIRtax. America's federal tax system has grown into a costly, opaque, and economically distorting apparatus that no longer serves the principles of limited government or individual liberty. The FAIRtax offers a coherent alternative. Replace the income tax, payroll taxes, corporate income taxes, and estate and gift taxes with a single national retail sales tax on new goods and services. Pair that with a monthly prebate that protects low-income households. This shift would restore transparency, reduce compliance burdens, strengthen incentives for work and investment, and realign taxation with the constitutional vision of the founding generation. The FAIRtax Act, most recently introduced as H.R. 25 in the 119th Congress, would abolish the individual income tax, the corporate income tax, the payroll taxes that fund Social Security and Medicare, along with estate and gift taxes. In their place, it would impose a national retail sales tax on the final purchase of new goods and services for personal consumption. The initial rate is structured at 23% tax inclusive. That's equivalent to roughly 30% when expressed in the conventional tax exclusive terms familiar from state sales taxes. Every household of lawful residents would receive a monthly prebate calculated from federal poverty guidelines according to household size. This advance rebate effectively removes the tax from spending up to the poverty level, introducing progressivity with respect to consumption. States would administer collection, retaining a small percentage to cover costs, while the Internal Revenue Service would be phased out. Dedicated portions of the revenue would still continue to support Social Security and Medicare. The Constitution's framers understood that taxation is necessary, yet inherently dangerous. Alexander Hamilton, writing in Federalist No. 30, acknowledged that a general power of taxation must be, quoting here, interwoven in the frame of the government to meet national needs such as defense and the public debt. Yet he and his co-authors consistently favored practicality and restraint. In Federalist No. 12, Hamilton observed that direct taxation is often impracticable and that far the greatest part of the national revenue is derived from taxes of the indirect kind, from imposts and excises. James Madison, the principal architect of the Constitution and co-author of the Federalist Papers, repeatedly emphasized that the power of the purse must remain under the control of the people's representatives and that a government authority must be carefully limited. He understood taxation as a necessary tool that could easily become an instrument of overreach if not tightly constrained by representation in constitutional bounds. John Jay, the third co-author of the Federalist Papers and later the first Chief Justice of the United States Supreme Court, shared this commitment to a government of enumerated powers operating with the consent of the governed. Together, the Federalist authors defended a system in which ordinary citizens retained primary control over their earnings and in which the government would raise revenue chiefly through voluntary transactions rather than by asserting a prior claim on every dollar earned. Thomas Jefferson drew the boundary even more sharply, quoting here, "They are not to lay taxes ad libitum or for any purpose they please, but only to pay the debts or provide for the welfare of the Union," end of quote. The income tax, authorized by the 16th Amendment in 1913, inverted that arrangement and opened the door to the expansive, privacy-invading system we endure today. Consider the moral architecture of the present system. Before a mother places bread on the table for her children, before a father secures a roof against the weather, before the most basic necessities of human life are met, the government asserts its claim. This is not the order of a free people. It's a reversal of the natural priority of self-government. The income tax does not merely extract revenue, it establishes in principle that every dollar earned belongs first to the state and only thereafter, by permission, to the individual who earned it. A national sales tax restores the proper sequence. The citizen earns, saves, invests, and provides for his household without the government's hand already in his pocket. Only when he freely chooses to consume does the tax arise, and even then, only upon new goods and services, and only after a prebate has shielded the necessities of life from taxation. In this arrangement, the people remain masters of their own economic destiny. They may lighten their own tax burden by the simple discipline of thrift. They need not petition politicians for relief. They grant it to themselves by the choices they make in the marketplace. Such a system does not merely collect revenue more efficiently, it reawakens the habits of independence and responsibility upon which a free republic depends. The prebate, formerly called the Family Consumption Allowance, is the mechanism that makes the fair tax progressive with respect to consumption. It's designed so that no household pays net federal tax on spending up to the poverty level. The calculation proceeds as follows. The Department of Health and Human Services publishes annual federal poverty guidelines based on household size. The fair tax adjusts these guidelines to eliminate the marriage penalty that exists in the standard poverty tables so that a married couple receives an allowance closer to twice the single-person amount rather than the lower standard figure. The annual family consumption allowance for a given household equals the adjusted poverty guideline for that household size. The annual prebate equals the tax-inclusive fair tax rate, 23%, multiplied by the annual family consumption allowance. The monthly prebate equals the annual prebate divided by 12. This amount is paid in advance every month to every qualified household. A household that spends exactly at the poverty level receives a prebate that fully offsets the sales tax on that spending, resulting in a net effective tax rate of 0. Households that spend less than the poverty level effectively receive a net transfer. Households that spend more face a rising effective rate on their consumption that approaches but does not exceed the statutory 23% rate as spending increases. For example, a family of 4 spending $66,000 annually, that's twice the poverty level, would pay sales tax of $15,180 on that consumption. Offset by the $7,590 prebate, that would result in a net tax of $7,590, an effective rate of 11.5% of total spending. The prebate is universally for qualified households, paid monthly by the Social Security Administration. It requires only annual registration with basic household information. It replaces the complex web of exemptions, deductions, and refundable credits in the current code with a single transparent adjustment based on household size. By shifting the tax base from income and payroll to consumption, the fair tax removes penalties on work, savings, and investment. Capital formation, productivity, and long-run output stand to benefit once earnings are no longer taxed until spent. Compliance costs, the hundreds of billions of dollars and billions of hours each year, would largely disappear for individuals and shrink dramatically for businesses. Embedded taxes, now hidden in the prices of goods and services we buy, would be replaced by a visible levy at the cash register. Americans would keep their full paychecks and decide the size of their federal tax burden by controlling their purchases of new goods and services. Used items would generally be exempt, and business inputs purchased for further production would not be taxed at retail, limiting cascading effects. The system would also capture spending by tourists, temporary residents, and participants in the underground economy, broadening the effective tax base beyond what income and payroll taxes currently reach. A pure sales tax can be regressive because lower-income households consume a larger share of their income. The fair tax addresses this directly with the universal monthly prebate. The same statutory rate applies to every taxable purchase. Sophisticated planning no longer creates preferential treatment unavailable to ordinary workers. Complexity, cliffs, and phase-outs give way to a transparent and uniform rule. The fair tax is not merely a technical adjustment. It's an opportunity to realign federal taxation with the constitutional order the founders established. Hamilton's preference for indirect taxes, Madison's insistence on legislative control of the purse and limited government, Jay's commitment to enumerated powers and consent, and also Jefferson's strict boundaries on the purposes of taxation. Government would once again raise revenue primarily through voluntary transactions rather than by claiming a share of every paycheck before families meet their basic needs. Complexity, privacy invasion, and anti-growth distortions would give way to transparency and individual responsibility. No major tax change is free of transition challenges or legitimate debate over rates and administration. Yet the status quo, an opaque, costly, and constitutionally anomalous income tax regime, imposes ongoing costs in liberty, growth, and civic trust. For a free republic whose founders preferred limited indirect taxation and whose enduring principles demand the restoration of citizen control over earnings, the fair tax offers a coherent and principled path forward. In conclusion, Travis has done an excellent job of setting forth how the fair tax is in total alignment with the principles of our founding fathers. Many people are upset with our present income payroll tax system because it benefits only a small percentage of the population, that being the very wealthy and the members of Congress who fund their re-election campaigns by selling favorable tax treatment to the highest bidder. For the rest of us, it's an expensive, intrusive, incomprehensible mess that none of us fully understands. The fair tax is the answer. The fair tax is more than just a proposal for a retail sales tax. It's a fundamental restructuring of the federal fiscal structure. Unlike other excise taxes, which are normally applied to specific products and in different percentage amounts, the fair tax applies a 23% rate to all new retail products and retail services. The fair tax is a national sales tax on new retail goods and retail services, which provides a family credit so that all purchases up to the poverty level for each family are not taxed. There's no withholding from your paycheck. You never have to file a tax return again telling the government how much you earned and how much you spent, and you'll never be harassed by the IRS ever again because the fair tax abolishes the IRS. Now, many of you have labored tirelessly for freedom from the federal income tax and the IRS. You deserve a great deal of credit for your efforts to educate the American people on the need to fund the American government in a way that's good for America and returns freedom to the American people. It's imperative, though, that we don't replace the current income tax and the IRS with an alternative system that could still be manipulated by the ruling elite. We must let Congress and the President know that the best way to replace the income tax and the IRS is with the fair tax. Now, make no mistake about it. The fair tax is a grave threat to the ruling elites. It will strip them of their power and their ability to control us through the tax system. Their opposition to the fair tax will be fierce and unrelenting. And don't think for an instant they won't use half-truths, deception, and downright lies in their desperate attempts to hang on to their power. However, with the support of this president, we can finally eliminate the income tax and the IRS. Of course, the best course of action is not only to repeal the income tax and abolish the IRS, but to repeal the 16th Amendment as well, so no future administration can ever shackle the American people with an income tax again. We must come together and ensure that real tax reform, the fair tax, is not subverted by the elites in D.C. This will take the diligent effort from all of us. We need your financial assistance and we need your grassroots assistance. Now, if you have contacts that will allow us to get more information about the fair tax to President Trump, please let us know. Please email us at info@fairtax.org and we'll give you some options on how you can best help us. At a minimum, please call your congressional representatives and ask if he or she supports the fair tax. If so, thank him or her for their support and suggest they become a co-sponsor of H.R. 25 if they're not one already. If not, ask why not. Now, if your representative claims to be unfamiliar with the fair tax, offer to have someone come to their office and explain it to them. The solution? Pass the fair tax. Now, why would D.C. pass the fair tax and give up an almost unlimited source of donations? Well, they won't, at least not voluntarily. The only way they will is if the rest of us demand it. Isn't it time to end this ludicrous tax collection system and the IRS along with it? Help us bring about real tax reform and stop future IRS abuses. By contributing or investing $10.40 a month, you help provide a financial base to Americans for fair taxation. Now, if you can make larger contributions/investments, these will be used not for salaries, as we're all volunteers, but for the needed updates to our economic studies, which will be vital for all future years. Please go to FAIRtax.org to invest in AFFT and help us pass the fair tax. It's an investment in your and your family's future.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at FAIRtax.org.